Let's bring in Scott Bauer. Let's bring in the CEO of Prosper Trading Academy. He's joining us this morning to talk financial markets. Scott, welcome. Before we get into some of the products that you think our viewers should be watching, I wanted to talk about some of the economic data while we had no numbers at the bottom of the hour. A busy day, a busy week for that matter. A lot of focus today on Fed Chair Jerome Powell.
Squarely on what he's going to say, and is he going to, kind of change course at all? I don't believe he will, because that would really roil the markets, quite frankly, if he did. So I believe that he is still going to talk about how we need the stimulus, how we need to keep rates low for ever and ever and ever and ever, and that we face challenges. Because if he does say anything, regarding pulling back at all, regarding raising rates at all, this could possibly send the markets into a tailspin.
I'd imagine there's going to be some focus on comments related to employment as well. We're hearing about how real unemployment's more like 10%, not the 6% that we've been seeing.
Yeah, and the trend that we've seen there, you and I have talked about this recently, the trend we're seeing is not a good one, and we'll get some numbers on Thursday as well. But yeah, like you said, the number of 6%, 6.5%, the real number is closer to 10%. So that trend is not good, and he certainly will address that, and that has to play into the Fed's decision of stimulus and keeping rates low for a while.
Scott, let's talk about with rates, the discussion being that Fed Chair Jerome Powell wants to keep them low, but we're seeing markets kind of tell a little bit of a different story. I mentioned at the top of the show that the 30-year versus the 5-year at the steepest level we've seen in 6 years. I mean, this is really telling us something, at least in terms of traders, investors' opinions about the economy bettering conditions, and while the longer term a reflection of, the short term maybe more a reflection of Fed Chair Jerome Powell and the FOMC's control over that shorter end of the curve.
Yeah, no doubt about it. And that 530 that you just talked about, that's really kind of the benchmark of where people look at for inflation. And like you said, it's the widest it's been, I think, in 6 years. So far, just in 6 weeks or 7 weeks of 2021, the 2-year, the short end, is pretty much unchanged. The 5-year is up about 0.6%. The 10-year is up, 0.45%. But the 30-year has climbed over, about 54 basis points. And, that is definitely where the concern is. And this run to inflation that people are so concerned about is playing out in the rates that we're seeing, especially between the 5 and the 30.
Sure has been. Scott, what does this mean for the U.S. dollar? So far, kind of limited in terms of response to some of the activity we've been seeing in rates. For the most part, it's been 89 to 92 right now. It's coming under pressure a little bit recently with some of the bid activity we're seeing in the pound. The Canadian dollar has been bid in reaction to crude moving higher. But ultimately, where's the greenback stand in all this?
I mean, it's really been stuck in the mud here. It just dipped below 90 this morning for the first time in about 6 weeks or so. This range of, let's call it 88, 89, up to 91.5 or so, is probably where we're going to stand until maybe some of this inflation, not just talk, but some of the inflation data dies down a little bit. But let's see what happens if, I shouldn't even say if, when we get the stimulus, depending on how big it is. Let's see when we actually get it, what happens to the dollar. I think that's going to keep continued pressure on the dollar.
Scott, have you been watching the bid in the British pound up and through the 140 level? Is that
absolutely?
Can you speak to it in terms of, obviously a little bit of a relief rally in terms of some of the Brexit concerns that have been playing out into the end of last year and the beginning of this year, but it's worth taking note of. This is a nice move here. It's something to be watched, to say the least.
A huge move, and we noted this a couple weeks ago when this was trading around 130, and really starting.
You brought it to my attention.
Yeah, so it's as much a move, Ben, on what's happening with commodity prices and also with some of the Brexit concerns, being towards the back burner now, as it is to their reopening. They seem to be far ahead of where we are and maybe much of the rest of the world in terms of their plans for reopening and getting 75% perhaps of their economy up and running. So you're seeing that certainly as providing these tailwinds to the British pound.
Scott, lastly, it's not just the Fed Chair Jerome Powell today. We're going to get some more information later on this week in terms of inflation data, personal income and spending. We mentioned the jobless already, a major focal point for traders, for investors. That weekly number this week as well on Thursday. What else do you have your eye on in terms of economic data, in terms of potential market movers here, and what should our viewers be watching?
To me, it's still squarely on the consumer, right?
Okay.
The consumer has just driven this market for the better part of a year, 18 months. And now that rates are steadily on the rise here, how is that going to impact them? How is that going to impact the housing market, which has been the barn burner of all markets? We're already starting to see mortgage apps slow down a little bit. I don't know that we can take, one or two or three near-term data points, and say that is going to be the precursor of what's going to happen this year. However, we've got to keep a very, very close watch on the consumer, Ben. And if they start to pull back at all, that's not good for the economy. I don't see that. I think things are actually very optimistic for the consumer. Nobody wants these higher rates per se, but when you really think about it, the higher rates mean that the economy is starting back up, and things are going here. So it's that double-edged sword, but all eyes need to be on the consumer.
Yeah, certainly a lot of focus here on earnings this week as well. Some of the individual companies that are reporting. I saw Home Depot this morning. The numbers came in pretty good, it looked like, and a reflection of what you were just speaking to in terms of the focus being on the consumer as well. Scott, appreciate you joining us here. A great breakdown in terms of what's playing out here in the financial markets and, well, what to keep an eye on today and into the end of the week here as far as some of the potential market movers. Scott Bauer, ladies and gentlemen, is the CEO of Prosper Trading Academy. Scott, thanks to you. Now that we've